Our next topic in Bill.com for Beginners, you will learn about a few best practices as they relate to creating a new bill. And during the software demonstration, we will look at each of the fields. For our discussion, we're going to look at a few exceptions. Let's start with the invoice numbers. They are a key data point in the historical record. The software will make certain that you don't pay one invoice twice. It's a required field, yet some vendors do not assign invoice numbers. And I have a few examples, bottom of our PowerPoint slide. The first, monthly utilities. I use the 2-digit month, a dot, and the year. For employee expense report, for the invoice number, I'm going to use the month, day, and year of the last receipt date included on the expense report because, fast forward, I receive the next expense report quickly. I can ascertain there are no receipts on the current expense report that precede the most recent document in history. And because the invoice number is a primary field in the record, it is readily available throughout the software. I do the same convention for consultants. Now let's talk about the transaction description. It is a critical data point for the GL details that you're capturing at the bill. There's two descriptions. There's one in the header that will apply to all the line items below, and then there's a specific description for the line item. And there's a strategic do's and don'ts. When do you not need a description? If it's a reoccurring monthly bill. It's a waste of your time and it clutters the GL. Let's start with the 4 examples where we do need a transaction description and start from the bottom at the fixed assets. Think of the depreciation schedule. We may remodel the CFO's office. We ordered several items from one vendor. They invoice us. There's a cost for the credenza, another one for the bookcase, etc. And each one of those line items need to have their associated cost basis so that the tax accountant can prepare the depreciation schedule. Also, we may transfer some, not all of these assets to another department, whereas we want to allocate the depreciation allowance. So also operations will benefit. When you think of repairs and maintenance, think of the budget process. I like repairs and maintenance to have one account for the contracts. I can review and determine whether I want to renew these contracts for the next year budget. And then I have another account for the repairs and maintenance other. This is the normal course wear and tear. I need details. Let's use, for example, we had 4 trees removed from the front yard. We do not need to budget in the next year. They're gone. For legal expenses, now think of your board of directors, CFO, controller, and your auditors. Each have a primary responsibility to ascertain there's no risk or litigation threatening the ongoing concern of the organization. One of their primary resources will be the GL, legal expenses, and the details that you extract from the attorney's invoice and update in the line item detail. So let's use, for example, we have more than one matter. Each matter should be separated on the attorney's billing, and there should be a status update of what occurred in the current billing cycle. For professional services, let's assume it's an intact implementation, extends over 120 days. That project plan had milestones. The consultant's invoice should replicate those milestones, and you should be extracting and updating the GL details for that historical record. Okay, let's talk about beginning balances. You have a previous balance on a current month invoice. The golden rule is that you never commingle the previous balance with the current period's charges. So in this example, I would enter in the purchases for $1,055, save that bill, research the previous balance. It could be a timing difference. We may have already paid the bill. The vendor just had not received the check. Or we need an additional copy, a second copy of the vendor's invoice. We've misplaced it. And if that previous balance, the vendor billed it in 2 different invoices, you want to enter in your bills exactly how the vendor invoices. So let's move on to the deny process. Approver number 2 denies the bill. They must enter in a note or a message. This is only a note message internal to bill.com. Does not transfer over to the accounting application. And if you have permissions to fix that bill, it will be on your to-do list. If it's your task, you can hotkey directly into those 2 bills to fix. When you fix a bill, it's a 1, 2, 3 step process. After making the changes, then you have to reassign the approvers based on the organization's best practice. So if approver 2 denied it, the question is, does it go back to approver 1 or does it go back to approver 2 and then move forward? And that again is based on the organization. This will be a handout for your quick guide. Let's move on to the demonstration. We're going to go field by field for the bill, and then we'll go through the approval process. I'm going to move back to, we have to sign back into bill.com. And we'll go down to the demo company. Now we're going to go to the inbox. And under received, and we sort by most recent. I'm going to create a new bill from the document on the left. I'm going to assume this document came from Verizon. I just have to type in a V. The software will index me in the vendor list. Once I select, I'll have 2 hyperlinks below the vendor name. One is a summary. This is the critical information to process the check. After you've confirmed correct, if there's any changes, you can hyperlink over to the vendor master, make the change, save it, and come right back. There's a second hyperlink to the right, and these are the last 5 bills in the history. And whenever you're looking at bills such as Verizon, you're making sure there's no change in the trend. So it looks like it's the exact same amount almost every month. No changes there. I can move forward. I don't have an invoice number, so I'm going to assume this is for April 2018. I'll accept the payment terms that we inherited from the most recent bill in history. I'm going to assume today's date is our invoice date, but I can override that. The due date will be calculated based on the terms and the invoice date. You once again can override it. Now my amount, this is the total amount for this invoice. It's the header of the bill. Since this is a reoccurring vendor invoice, Verizon telephone bill, there's no bill description necessary. There's nothing unusual about the amount, so there's no note to the payer. The split was inherited from the prior most recent document in history. We recorded it to telephone under both line item detail, but we allocated some to administration and some to fundraiser. Now this is where we have an exception to our rule. If we're going to allocate a monthly bill, it may be nice to go ahead and enter in that allocation in your description. This will be beneficial for the GL details, but it will also be beneficial to next month when, because the next month's bill to Horizon, fundraising, will inherit the terms, the bill description, as well as the GL account and the approvers. So that's the data that's inherited from the most recent document in history. So there's many benefits to entering in that allocation. As long as the sum of the amounts on the line item detail agree with the header total amount, then we can save. If this happened to be one of those fixed assets, these are the line item details that I can enter in the cost basis for the bookcases versus the credenza versus the desk. And there's no practical limit to the number of splits. Now, because the CFO office, all the furniture is starting out in the CFO's office, I can use that as my header for my bill description. This header will apply to all the line item detail. These descriptions will just be in the GL details on the back end of the header description. Now let's go down to the final section, which is the approvers. I can add an approver. I can use the icon to the right. This is across the board, and most cloud-based applications allows you to drag and drop and change the position or sort. I can remove the approver as quick as I add it, and I can either save to go to the next item. I'm going to cancel. If we would have saved, we would have expected this document to move from the inbox, received to history. Now we're going to go over to the payables approved to look at how the denial process works. And this document has been denied because when I go into approve, I don't have my buttons down at the bottom, but I've been trained well and I know to come and review for approval. This would indicate that this bill had been denied, and now I can see my buttons at the bottom to either make certain, based on this note, the changes were made, and then move the document forward. If part of my role assigned allows me to fix this bill, it will be on my to-do list, and if I have a primary responsibility for the task, I can hyperlink in and fix the bill. So let's return to the PowerPoint for our exercises. And our first exercise, you can read and the PowerPoint, and please hang your tent when done. Everyone is done. We're going to move on to our contest. And the first one with the answer, please stand. We have our first contestant. They're at the flip chart, and their answers look correct. We have legal expenses, professional fees, fixed assets, and repairs and maintenance as 4 critical data points for transaction descriptions in the GL details. They get to win a prize, and we're going to move on to our quiz. Take down the tent when done. This is a kind of what they call a brain teaser. Okay, let's move on to the answers. The invoice number and invoice date is missing on the consultant's invoice. The services were for November. We're going to assume for the full month of November, and today is January 4th. So my invoice number would be the last day of assumed services, which would be 11/30/17. My invoice date, if November was still an open period, I would enter in my invoice date as 11/30, and I would make a note that the invoice was received January 4th. It would be part of my description details. And then if November was closed, I'm assuming December's still open. It's too early in January. Therefore, I'm going to use GL period December, and I'm going to give this an invoice date of the first day of the month to indicate that it might be high probability a prior period expense recognized in the current period. It was immaterial, so we did not open the period. For your handout, you're going to get the step 1, 2, 3 for denying a bill and what's next to getting it through the approval route. And then we're going to look at another handout is what happens when your vendor does not provide invoices numbers. Okay, we have completed our 5th agenda item. We have one more. If you're watching by video, you can stop this video, go back to your Bill.com library, and launch the last in the series. And if you're in the classroom, we'll just continue.